I think if you have Bitcoin or you have gold as that monetary base, there's always that potential to revalue. Central banks could say, you know what, we like the idea of Bitcoin. We're going to create a blockchain, triple ledger, hard cap digital asset that's going to be a central bank. These monetary instruments are about kind of securing, resources, securing jobs, securing prosperity for people, and that we will get through this volatile.
What if a new global monetary system could emerge from the chaos of economic instability? In today's video, Mel Mattison explores how Bitcoin and gold could become key players in the upcoming financial revolution. With parallels to the 1940s and predictions of a monumental shift in the next 12 to 36 months, this is a must-watch for anyone concerned about the future of money.
I think, that problem with gold about, easy to send around and so on, it might be a little overstated, right? I mean, the central banks would hold the gold at Federal Reserve, or they'd hold it in Switzerland, or they'd hold it at the Bank of England. And the BIS would monitor this, the Bank for International Settlements, the central bank for central banks based in Basel, Switzerland. And they would do the accounting to transfer, gold from India to the United States or vice versa. And then the actual, transaction mechanism of these currencies, which was backed by gold, was, divisible into dollars and pennies and dimes, and you could do ledger accounting and do things so that money was being moved more or less instantaneously without physically trucking the gold from one place to another. That had its issues, but it seemed to suffice at least. I think a lot of people were really upset with the gold standard during the Depression because they couldn't increase the money supply, right? They couldn't take that gold and say, we have a lot of money, because gold in the US was pegged at $20 an ounce. And that was why, FDR confiscated gold in 1933. That was why he immediately revalued it at $35 an ounce, and therefore, increased the money supply, $15 on a $20 base. That's a 75% increase in the money supply overnight with the gold revaluation. And so I think if you have Bitcoin or you have gold as that monetary base, there's always that potential to revalue, right? There's always that way where, we just had a global pandemic and we need to increase the money supply. And the way that happens is you have you're actually benefiting from having a difference between the reserve asset and the transactional asset. So the transactional asset, what people get paid in, what they buy stuff with, can be devalued and increase the money supply in a time of, global financial emergency. But at the same time, savers that own the gold or own the Bitcoin don't get devalued away, which is what happened in 2020, right? So we had a global pandemic. We basically needed to print trillions and trillions of dollars around the world. No government wanted to tax people trillions and trillions of dollars and say, we're going to take 15% of everybody's net worth. Instead, what they did was they just printed the money, and through inflation took 25% of everybody's net worth in order to pay for the COVID response. And so you hurt the savers, but you did get the money supply increase. If you have a neutral reserve asset that can't be counterfeited, printed, and you need to expand the money supply, it's beneficial to have a transaction asset and a reserve asset separated so that you can essentially revalue that transaction asset and not be hurting savers that want to maintain their purchasing power. Well, I think we're going to have Doge come up with cuts, and in some of the exuberance and enthusiasm for those, I think Elon might find out it's harder to make big cuts in Washington than put rocket ships on Mars. But basically, we're going to have, I think, Besant as the puppet master of all of this behind the scenes, whether it's a new financial system, managing, cutting the deficit at least somewhat without tanking the economy and the stock market, and then starting to essentially put together the frameworks and the channels for this global reordering. I think at some point it is going to require a summit, something G20, maybe bigger. Maybe some members will refuse to go because they want to, be in a BRICS summit. But I think there's a good chance for an actual formal monetary summit, the likes of which we haven't seen since Bretton Woods, which was exactly 80 years ago this past July in Bretton Woods, New Hampshire, where people got together together specifically to create the new monetary system post-World War II. And so where does this all end up? I've tried to lay out different scenarios, things that I think are within the realm of possibility, but of course, I don't know. I wish I did know exactly, this is the path that I see has to happen. I think there's so many moving parts in it, but I do think, going back to the beginning, that the monetary situation is more acute and more dangerous and more fragile and more precarious than any of the big parties want you to know. It's the same type of a situation in 2007 when you had Federal Reserve governors coming out and saying the mortgage crisis is contained. Don't worry, this isn't going to spill over into the real economy. We've got it under control. And lo and behold, what happened?
Mel Mattison argues that we are approaching a critical moment in global finance, one that could be defined by a dual monetary system involving Bitcoin and gold. By examining past financial crises, such as the Great Depression, Mattison highlights how these two assets could play a crucial role in stabilizing the economy, especially in times of financial emergency. In particular, he discusses how the pandemic-induced need to print money disproportionately harmed savers, further validating the need for a neutral reserve asset like Bitcoin. Bitcoin, unlike traditional currencies, cannot be manipulated by central banks, providing a safeguard against inflation and devaluation. Mattison suggests we are on the cusp of a massive shift, one that could involve a new Bretton Woods agreement and bring long-term stability to global markets.
And so I think you've got people saying, look, Powell says the debt level is not unsustainable, but our trajectory is unsustainable. That's his go-to statement for it. I think that we're getting close to a point where even the debt levels are getting unsustainable. And I think especially if interest rates continue to rise, given the interest expense. And so we're at that crisis point. And so what I do see definitely coming within the next 1 to 2 years is a major crisis point, a crisis point that creates a lot of volatility, that creates a lot of some of the ideas I've been talking about getting out there into the ether and really scaring different financial players, participants, markets, sovereign wealth funds, pension funds, insurance companies, people getting scared. And then coming out of that, some sort of a pragmatic solution that I think actually Besant has been training his whole life kind of orchestrate. Like, cometh the hour, cometh the man type situation where, the world is at a point where it's becoming household knowledge now. Things that, I used to research and study and talk about, years ago, uncontrollable debts, entitlements are going bankrupt. We're turning into a banana republic with our spending. You can't trust the purchasing power of the dollar. All these things that Bitcoiners and other people have known for years and years are starting to enter the household vernacular. And we're coming to this point, and I think that's what's going to happen. And exactly how that turns out, I don't know. But I do think Bitcoin and gold will be a part of it. It could be that people start to realize, hey, US is still going to do some trading with China and BRICS nations, and they're going to need and want to hold gold as a reserve asset for that. But that Bitcoin's also going to come in and serve as a reserve asset for those countries that want to start buying into that kind of mechanism. Who knows? Central banks could say, we like the idea of Bitcoin. We're going to create a blockchain, triple ledger, hard cap digital asset that's going to be a central bank digital asset, like a special drawing right that the IMF created. I think there are problems with that. But I do think there's just so many of these big unknowns that there's no way that once these things start getting talked about in the open and in the Wall Street Journal and on CNBC and Fox Business, that they're going to roil markets. And so I think that Trump's inclination to keep the stock market going, keep the economy at full employment, is going to lead him to do things that heretofore have been thought unthinkable, like significantly change the mandate and interactions of the Federal Reserve and the Treasury, break that 1951 Treasury-Fed Accord, and have government much more involved in monetary policy and yield curve controls, these types of situations, maybe even capital controls on dollar exports. And so all of these things I think are kind of on their way, and it's really going to be a pivotal time. Probably, like I said, the greatest monetary shakeup since 1944 is coming in the next 12 to 36 months. And I think at the end of the day, what we're talking about too is these monetary instruments are about kind of securing, resources, securing jobs, securing prosperity for people, and that we will get through this volatile period. And I don't think it's necessarily a super long volatile period. I think it could be a sharp period, kind of a shock to some people who think everything is going to be rosy for the next 12 months. But that I'm talking about a matter of months. And once just like the COVID drop was like a 40-50% drop in the market, and then it was back, that when we come out of this and the new Bretton Woods occurs or the new systems in place, that it's going to also be matched with real industrial policy. It's going, like, imagine there's yield curve control and interest rates are capped, and we've got, massive onshoring going on because of tariffs, and everybody that wants a job can have a job, and wages are going up. Maybe there's a dollar revaluation here in terms of Bitcoin and gold, which is inflationary, but that wages are going up more than inflation. Maybe inflation runs at 7-8%, but wages are going up 10-12%. That benefits paycheck to paycheck America. And that's a big part of the Trump base. It doesn't necessarily benefit pension funds or insurance companies, but if you literally have $200 in your bank account and you're living paycheck to paycheck, if all of a sudden you get a 12% rise, but even though there's 7% inflation, but you got a 12% wage gain in the past 12 months, you're doing better. And so there are ways to paint inflationary policies, resets, all these types of things where people start to understand, hey, this might not be great for corporate profit margins. It might not be great for treasury bond holders, but this is the right thing for America so that we can rebuild our manufacturing, we can regain our sovereignty, we can, have a happy, thriving middle class.
As Mel Mattison envisions, the future of money may not be solely in the hands of central banks or traditional currencies. Bitcoin and gold could play vital roles in a more resilient, fair financial system. With the world facing unprecedented challenges, this is the time to consider how these assets could help navigate the coming crisis. Found this analysis intriguing? Like, subscribe, and hit the notification bell for more insights into the future of global finance. Don't miss our next deep dive into the monetary revolution.